Well, hello everyone. Thank you for tuning in. Thank you guys for joining live, and thank you guys for listening to the recorded video. Today is doing. I wasn't. I thought I canceled today because I had meeting earlier today, and I totally completely forgot to cancel a meeting. So the meeting reminder went out, and then people are asking me where I am at. I came back to the office and I went live. So thank you very much for showing up in a late notice. Thank you very much for waiting. Thank you guys for if you guys are watching it the midweek update via static video. Lately I've had a lot of time lately. So I'm not even thinking about doing this on a weekly basis. Go live, every week, once a week. If you guys are into that, if you guys are cool with that, but yeah, I haven't looked at the market all day today, and that's the beauty of position trading, because you really don't need to look at the market all day. But that I'm just glancing at it right now. I know you guys are very concerned about Apple. I know I had a lot of question on that. We'll look at that. We had pretty dramatic decline on that. We'll look at that. We'll look at indices, Tesla, obviously, Spider, Russell, Nasdaq, and Financial Dow Jones, and we'll go from there here. So, any specific questions that you guys want me to deal with today? No questions. No questions is good. Okay. Let's share the desktop here. There you go. Very nice. Well, a lot of people showed up, despite the fact that we started the live midweek update an hour later. I know I had a question. Let me check my email. I know I had a question regarding Apple this morning. I didn't look. Again, I wasn't looking at the market this morning, so I couldn't able to answer. Let me just check that real quick on my email. So the question is from Spicy15 on my blog there. Hi Kate, this sure smells like a repeat of 2012. Feels like about 620 for the first bounce. If this is repeat, what do you think the bear case looks like? The first level support around 95. Do you see an oversold bounce? Do you see it going lower from here? Thanks for your thoughts. Spicy15, thank you for your question. Let's deal with the Apple first, right? Let's deal with the Apple first, and then we'll go ahead and answer that question there. All right. So the question is, this person asking is, it sure feels like 2012. Sure feels like 2012, and I can assure you, if you looked at my blog post back in September 2012, how I felt about September 2012. Actually, that's how I became infamous, because of that. Because of that article, because remember, we had a weekly bearish divergence, daily bearish divergence. We had a weekly evening star, daily evening star, monthly, and then we had a head and shoulder daily, we head and shoulder weekly. We had all these things happening at the top here, right? As far as feeling like 2012, it feels like it because we just came down, like it just declined. But as far as the sentiment is concerned, it's not quite like 2012, because we do not have a weekly bearish divergence. We do not have a daily bearish divergence. We do not have, let me look at weekly chart here. We do not have an evening star. reversal. We do not even have island reversal, which we had on that, and we don't even have evening star on monthly chart. This is evening star reversal. Also, it could be a tower reversal. You can see that this is a monthly chart. You can see that we had that shooting star like candle, the bullish candle, bearish candle. We closed below that confirmation of evening star. Boom, 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 boom. About 4 months there. And then we had, remember, we had a bearish divergence daily, bearish divergence weekly, with an island reversal, head and shoulder daily, head and shoulder weekly. We have none of that stuff happening today. However, only thing we have on Apple today is what many can consider this as a potential topping pattern, and that might be because now we're getting below this level here. For the longest time, I thought this is more like a channel action, and it sure was more like a channel action before we saw this. So that's the problem. So what are we gonna do with that? So what does that mean? That is the biggest question that I'm asking myself here. So if we go back to kind of a price, a lot of times, what I like to do is, if you want to understand certain sentiment, what you can do is, obviously just because it happened in the past does not mean that it's going to happen again. But what you can do is kind of go back to a historical past behavior and then see what it looks like then. To me though, this what it feels like back, it doesn't feel like September 2012. Because you guys know what we had back in September 2012. Go Google search 10 reasons of why I am extremely bearish on Apple. That's my blog post. And I put 10 reasons why we have so much bullish on Apple. We don't have that. What we have is a potential topping pattern that initially confirmed. And something I've been talking about all year long is this is a market that we're dealing with. The initial confirmation is not enough. We need a full confirmation. And it looks like right here, this was the initial confirmation. This was the left shoulder. This was a head. This is a right shoulder. This looks like a massive topping pattern. We've got below 200 SMA because there's a lot of talk regarding getting below 200 SMA on the daily chart. And so I had a lot of comments on it. And because we are below 200 SMA, are we gonna think there's gonna be some kind of shenanigan happening? Because I know you guys probably using that word now because I use that word a lot. It's a shenanigan in this market, right? It's shenanigan every day. Like life of a trader, you deal with the shenanigan every single day. You know what you do? You completely ignore it, right? Your shenanigan happens all the time. But anyway, so today's action, to me, it feels more like June of 2011. It doesn't feel like September 2012, right? Doesn't mean that I'm 100% always correct. I could be dead wrong before we do something like that. And obviously, as of today, do we have any kind of evidence of that? And that's the big question. This was a 2012. We had a weekly, as far as a weekly bearish divergence is concerned, we probably had the most strongest, potent bearish divergence you would ever find in technical analysis, and that's what we had on a weekly chart on Apple back in September 2012. This is as strong it's gonna get. This is as strong it's gonna get in 2012. This was a major bearish divergence. And a lot of times, bearish divergence alone is not enough, but when you put all that together, all the evidences together, right? You can convict somebody. You viewed all the evidence together. So we have a weekly bearish divergence, which is this is a major topping pattern. But you add their daily divergence, you add daily head and shoulders, island reversal, evening star reversal on the monthly and weekly. That's what you get here. But today I do not see a bearish divergence here. I don't see that. And as far as bearish divergence confirmed, I teach my members here. You can kind of say, hey, isn't this a bearish divergence right here? It is kind of bearish divergence. However, it loses potency when you grind like that. You know how it grinds like that? It hits it, and then it's starting to make lower highs on our side. That it loses its potency. The most strongest bearish divergence is when it's peak to peak like this. Look at that, clean. This is what I call clean bearish divergence. Lower highs on the oscillators, higher high on the price action. Clean. This isn't clean. This is messy. When it's messy like this, it doesn't play out as much. Just go look at your financial sector, XLF, and go look at weekly oscillators. How long we formed bearish divergence on weeklies? For like 2 years, and it didn't tank the that sector. It kept grinding higher. It loses potency. What it does though, it is preventing the stock from like soaring up though, but it's not completely rolled over yet. I was hoping to see something bullish today. I was hoping to see that. I didn't see it. Gap down. This is what you would call. I wish we closed somewhere here. This is kind of a bullish piercing. It's a bullish piercing candle there. We had a bullish Rami right here. That's a bullish Rami. Once we got above the previous candle, this is initial confirmation, and then we had that move. Earnings gap down, fear, and we actually put in lower low. That's not a good sign. That's not a good sign. But again, going back to, remember I said that it looks more like a June 2011? Well, we did put in lower high here. Again, just because that's what happened in June 2011, I can't say that that's what's gonna happen today, right? I can't say that. What I'm saying is that there's still a chance of that happening. Wait, how did it bounce? Let's go back to June 2011 and see how it bounced. Oh, we pretty much V-shaped higher. Okay. So you can see we got that going on, and then we pretty much V-shaped higher after a little bit of hammer there. This was a point where it pretty much broke all the support. See that right there? I mean, it broke the support here, and we talked about this last few times. It will break supports. Broken support, broken support. Broken support is not a really huge deal. It's not end of the world. If the support gets broken, does not mean that this thing is gonna completely crash. This is what we call primary term uptrend. So we should respect primary term uptrend more than a broken support. Because support was broken here, obviously. So let's talk primary term uptrend on Apple. What do you call this? Low. What do you call that? Higher low. What do you call that? Higher low. What do you call this? Higher low. What do you call that? Higher low. What does this mean? It means anywhere above 105, it is a vicinity. It's a potential level of higher low. And whatever happened to the Fibonacci? Let's see. Let's put out Fibonacci level there. Did it break below my Fibonacci level? It did. Again, we got slightly. Please do not be obsessive with that. Just getting slightly below, because this market is not. This doesn't know Fibonacci analysis. So when you do Fibonacci analysis, just because you got it slightly below, like, I wouldn't be obsessive with that, because there will be times where it's gonna get slightly below, and then it just, you know what I mean? It's just gonna go. Like, if I don't know if I can find. Probably can't find. Example there, but I've seen so many times where it gets slightly below that. So it's the vicinity that is important. So let me adjust this right there. Okay, so let me go to line chart again. Okay, so I adjusted it on the candles. Right? I went up here, 100%, 0%, and we got Fibonacci retracement there, and get a line chart. So we're just about right there. We're just right there. Is this still a vicinity? It's still the vicinity. So it's the support is still valid, and with today's action, which looks like bullish piercing, but that bullish piercing doesn't mean anything without a follow through. So if we see move like that, that will be initial confirmation. If we get a second day follow through, there will be a full confirmation of bullish piercing candle pattern there. And if we can stay, and once, okay, so and I don't know if that's what's gonna happen, but let's say next 2 days this is what we see, and we get up, we might pull back and we stay above at 119.14 and then gather momentum and then get back up. The problem is once we get up there is going to be that gap. This gap is gonna bring some problem. Doesn't mean that, you know, what I mean is a lot of times when you deal with gap, it takes its time, it lag. What it means is I'm not sure if this thing is just gonna shoot right up through it. What could possibly happen is we start to really fizzle around here, just having hard time to fill this gap. We might even have a huge dip, go up, come down again, go up, come down, and shenanigan like that. That will be just speculation. Again, I would have to see how it plays out next few days to for me to understand what's going on. So this, okay, so for Apple to completely roll over, like if you want me to give you a scenario that Apple's gonna, if this thing comes lower and then do stuff like this, then we're going down right here. Apple is tanking. If we see that, then we got this massive head and shoulders, and this thing breaks this neckline, and essentially what you want to see is you want to see this retesting supports, resistance, and fall over. You probably want to short right about here, and you can do a measure move. Probably gonna come and feel this gap. We're coming down on 75, and we see something like that, then that's a problem for Apple. We're probably gonna see shenanigan like this, like back in 2012. Until then, there's still a chance. There's still a chance that Apple can turn this thing around. All right, I'm just kind of going back history. Yeah, if anything, it looks a lot like here. This is what it looks like to me. This is what I would have said if I was analyzing back in 2011. If this was today, this is what I would have said. If this thing comes down here, goes up, rolls over, we got this massive thing going on, and Apple's going down. That's what I would have said back in 2011. What I would have said also, though, this is still vicinity of potential high low. You see? This is how trend moves. So we got to respect the trend. That's the first thing. You respect uptrend. You respect uptrend. You always respect primary term uptrend. You don't ever presume upon it. You don't arrogantly call stuff. Nothing. So obviously, you know, if we kind of compare this move versus this move, we're not seeing a smooth move as 2009. I mean, this was Apple's prime time though, back in like 2009 and 2012. I mean, Samsung was crap. Samsung's phones were like seriously crappy back then. Now, Apple, you know, Samsung phones are getting up there. I actually went to go get, you know, because I have Samsung now, I went to go get iPhone 6 Plus. And to look at it, see, maybe I'll go back to iPhone, because I kind of go back and forth. I did have iPhone. I went to Samsung this time. I want to go back to iPhone, and I held it iPhone 6 Plus, and I'm like, this looks cheap. Like I was telling the associate, this feels cheap. Like, when was the last time Apple felt cheap? Apple is not about feeling cheap. Apple's feeling elegant. You know what I mean? Artistic. And he's like, yeah, you know, after Steve Jobs died, you know, they're just living off of what he did, but they're not really. and they're like promoting Samsung in these. I mean, obviously we're just talking about one store I went to. We're not talking about the all nation. So I ended up not buying it. I ended up just like, you know what, I might wait for the iPhone 7, or maybe I'll wait for Samsung Note 6. I don't know. I still have kind of a my phone's kind of breaking down actually. I'm the type of person, like, you know, when I get any kind of electronic, I don't keep. I know there are people who are like out there, like every year new one, they change it. I'm not like that. I get it, I wait until it breaks down on me, and then I get a new one. Like, I'll do that, like, because you can't, like, technology moves so fast. I can't just always get a new one every time it comes out. So I am due for a new phone. It's just I'm not. Apple iPhone 6, be honest with you, iPhone 5 feels more elegant to me than iPhone 6. iPhone 6 Plus feels cheap. It looked like they want to copy Samsung's big screen. It, you know, maybe that's, you know, but again, that logic don't work here. Please don't go, oh my God, Kay said that iPhone 6 feels cheap, therefore Apple is gonna tank. No, because September 2012, iPhone 5 was gonna come out, iPad mini was gonna come out, everything looked great. iPhone 5 is still better than iPhone 6 as far as, you know, just the way it feels when you just, you know, when you look at it. But this thing still tanked. Everything was great as far as the product's concerned back then, and Apple. This thing still tanked. So that logic don't work. This is the reason why we stick with technical analysis, so we don't, you know, deceive ourselves with our opinions. Right? I'm like, I go to T-Mobile store, Apple feels cheap, I'm gonna start to short the heck out of it. That doesn't work. We know that. You know all this. So I mean, I just spent about 20 minutes here on Apple. As of today, there's a something going on. It's better than nothing. Let me look at oscillators. We are at an oversold status on the daily charts. You can see this is our RSI, and let me put out stochastic in there as well, because stochastic could give us a little bit of you know, insight here. So we got MACD, RSI, stochastic here on the daily chart. So, you know, as far as the MACD is concerned, we haven't gotten this level quite yet. So we're that, it was a low level. Same with the RSI, we're hitting this level twice, and stochastic, we're at a, you know, extremely oversold status right here. We hit that twice. Many times when you hit these levels twice, it could mean a bounce like here and here. See right there. So that was bounce there. So possibly something, but again, these indicators, you gotta be very, very careful. You can't just assume stuff. Just because it's oversold does not mean that they are going to bounce. These are kind of a reference thing. This could be the level, could be, right? Could be potential level. Once we start to see substantiation from the price action, the price action backs up what the oscillators are doing, then we can say, let's say if this thing starts to get up like this, and MACD as well, and then price action condones it, then I'm like, yeah, okay, so that's a good level, and then potentially we might even have V shape there. I think it would help a lot if market starts to bounce this week. Today's Wednesday, we got 2 more days. So let's look at the market here. Any questions on Apple before I go into the market? Ladies and gentlemen, any questions or anything that you think I missed, or anything you want me to look at, or something that you're seeing I'm not seeing? Anyone? Oh, I had a question. I don't know why I didn't hear. Okay. I had a question here. What do you think of the resistance at 117.50? $117.50. What do you think of the resistance today, which was a support level on the first day of the big sell-off? Did you answer mine? You can see more clearly on an intraday chart. You see, I don't respect intraday chart supports. You want to look at primary term, so I'm not gonna look at intraday. I don't see any resistance. What I do see is a gap. So I think it's better to say that, what do you think about this gap area that potentially becoming resistance? I think that would be a better question. I'm not saying that your question was bad. I just I don't look at intraday pivots. I don't think it works. I think daily is a minimum. So, but however, we have a gap. That gap is gonna provide. I don't know why I'm not getting freaking notices on my chat here. I gotta figure out later. I'll figure out later. I'll just open the chat so I can see it, because usually it like rings when I get it. You can see more clearly on the chat. Okay, on the daily chart, if I got rejected at the low on the previous day, yeah. So there is resistance here. I mean, obviously the gap area is gonna provide certain resistance, right? So that's also concern. It can get up and fill this gap, and that's also the level of old resistance new support area as well. This is a resistance. If anything, resistance will be 119.59. If anything, 119.59, 120. Let's just call 120, 119-ish. 119, 120-ish is gonna be resistance, because that's the new support, old support. So if this thing comes down here and this thing fails, this thing might roll over. And this is a very dire situation for Apple. Yes, this is very dire situation Apple. So 119, 120, we fail here. And we make new lows, but you gotta make sure though. It fails and it makes new low, because what it can do is it goes up, it fails, comes down, finds support, and boom, we get a double bottom, or we couldn't even have a triple bottom. We've seen that before happening. So I think that's a good question there, Peter. The gap area is 117.60, could act as resistance. 119, also 120. So there are a lot of obstacles that it needs to go through. So if we get there, we get rejected, and this thing gets, if this thing falls over, creating new lows, then we have a problem. Then Apple might be finally tanking, and Apple might be going to have another crash, and then everybody buys Samsung, and Apple just now, once a fame, this elegant company now is just dead company. I mean, possibly, right? But right now, that's just a speculation. We don't have a price action to substantiate that, but this is a dire situation. If that happens, I have to go out with a loss. My only hope, if we keep grinding lower than the level to watch, is 110. We already filled gap. Oh, we filled gap today. That's where we found support. Okay. That's what happened here, guys. We filled that gap. That's how we found support. What happened? What happened? Yeah. So we fill this gap. That's where we found support. A lot of times gap fill, it provides a support. And that's where we're finding support. So if this thing come lower, then no, next support is like here. It's like 108, 109, and then after that will be 105. So this is a support now at 112-ish, and then it's gonna be 108-ish, and then it's gonna be 104. Those are gonna be support. If this thing continues lower, we're probably gonna find a strong bounce here, and then it's probably gonna do something. If we do something like that, and we get this massive head and shoulders, that will come on weekly chart as well. If we have that, then we will have daily head and shoulders, we will have a weekly head and shoulders, and Apple will tank and it will crash, and it's probably not going to be pretty there. Do you have a stop for your positions? I currently do not, but this is where I'm probably going to place my stop somewhere down here, but I haven't put in physical stop yet as of today. Here's a you know, some people ask me what are the philosophy behind placing a stop and not placing a stop. And one thing that I talk about is I fear more of a cultivation of a downtrend, not straight down move. So when it comes to placing a stop, what I do is if this thing did this like that, I would have gone stopped out right here. Because what is that? That's a lower high and that's a lower low. I am fearful and I will run and I'll get stopped at and I'll run. I'll just take a loss if we start to cultivate. You hear me saying that word a lot because it's important. Cultivate a downtrend. What is the definition of downtrend? Lower highs and lower lows. What I don't fear is straight down. Straight down move doesn't fear me because it's dramatic. I get it. It's dramatic. However, a lot of times straight down move can be met with a just straight up move. We've seen something like that on S&P 500 when we had that, right here. When we had that, was it an Ebola X? You said it's straight move, straight down move, and then we met with a straight up move, bullish move, right? That's S&P 500. So I don't fear straight down move. What I do fear would be a cultivation of a downtrend, like like lower highs, lower lows, right? Like same thing like here, lower highs, lower lows, right? After putting this, I mean this was obviously head and shoulder formation. We confirmed there, boom. Look at this. Even if we just analyze this 2011 August, decline here, you can call it flash crash, that straight down move didn't do much damage. I mean, yeah, that was dramatic. Everybody started panicking. Oh my God, what's gonna happen? But what happened? That was a bottom. And then we got back up. If we just had 3 months of patience, you would have got all your losses back up here somewhere. And then we gained that all back. So, to me, the straight down move, I don't fear. So I mean, obviously, I could be wrong here. Anything can happen in the market, but it's rare. It's a rare. So as of today, if I go to line chart, do you see a lower high here? No, that's not a lower high. That's an equal highs. So as far as the lower high is concerned, we still haven't cultivated lower high yet. And you could say, well, okay, we may get lower high from here. That's true. However, remember what I told you. I always do my analysis based upon a tangible data is at hand. We don't have that data as of today. Yes, he can do this, but he can do that too. I don't know which one is going to happen, but I'm going to give benefit of doubt that potentially that could have some kind of, because we had a straight down move. What would have got me out of this if we did something like this? Then I would have placed my stop just below here. I would have gotten stopped out right there. The reason I didn't place my stop is because that's a straight down move. That's just that. And that doesn't scare me. It scares majority. It doesn't scare me. Like it's something like this. Actually, this one did have a lower high though, and lower low. This one actually looked more dangerous, but it got back up. This one actually looks more dangerous. You know why? They actually, as far as the chart pattern is concerned, guys, back in June 2011, July 2011, it was actually more stronger bearish pattern. We had a lower high, and we put in lower low. This was an initial confirmation, but I always say that we need full confirmation, not initial confirmation, right? We kind of had a lower low after ER. You see, that's the thing is, I don't look at intraday. This to me doesn't feel, that's not legitimate lower high. I'm talking about lower high like this. Okay, this blip 3 days, that I don't consider that as a lower high in my philosophy, in my trading philosophy. Doesn't mean that you can't consider it as a lower high, right? I'm not saying that that's wrong of you to say that. in my trading philosophy, in my trading system, that is not considered as a lower high. What I meant is, if this would have been done something like this, come down and then had that legitimate, like it stayed a couple weeks to have a kind of legitimate lower high, that would have got me out somewhere right about here. So that's, again, in my philosophy, in my trading system. Doesn't mean that that's not a, you know, somebody else might think that that's a legitimate lower high. I don't look at it like that. Any other questions? How does TLT look to me? Let's look at TLT real quick then. I haven't looked at TLT in a while, but we can all see the lower highs and lower lows. But we are cultivating something, aren't we? Oh, Sherry, oh, sorry about that. Yeah, you know, I wasn't I wasn't thinking to, yeah, there's some confusion. I actually was going to cancel this session because I had a meeting earlier. And then I had all these, and then my meeting reminder went out, and then people were like, where are you, Kate? We're waiting for you. So I'm like, I hurried back to my office to start this because I didn't want people to wait around. So I do care for you guys, just to let you know. I don't just think, like, I actually had a place to, like, I was gonna actually stop by somewhere, like, after how much did I miss? You missed entire Apple analysis. I did like 30 minutes, so you can watch the video. You know, we're done talking Apple though. But yeah, no, I care. You know what? I care for you guys. I actually had some errands to run. I had a meeting, and I was gonna stop by a couple places, and then I got these emails like, "Where are you, kid? We're waiting for you. We're waiting." So I actually charged here to start this meeting. I don't just look at you like some, internet people. Like, we're all human beings, and yeah, I get that we're all digitally connected nowadays. So I take it very seriously. I took it like, that you guys are waiting for me at my office. That's how I took it. I charged here. I started. I tweeted out. I'm sorry. I'll go live. So yeah, either you remember or not. Thank you for following, and we're all here so we can all prosper together and learn at the same time, right? Anyway, so I wouldn't go too far with TLT. Yeah, I mean, you know what would make me want to go long on TLT if we do something like that? That would make me want to go long on TLT. Why? Left shoulder head, right shoulder. However, you need cultivation. What cultivation? Higher high. And what is it that you need? A full confirmation. And you can always, you can always anticipate, but because of we're still doing the downtrend, I would want a full confirmation, which means retest the neckline and bounce from it. And this will be why I would like to go long. And you might be like, well, okay, that's too long of a wait. Well, then this is not your setup. You see, if I want to go long, I want to hold things for 6 months minimum. So I want to make sure it had cultivated higher lows, higher highs. We have cultivated what? An uptrend. You can go long here just to swing trade that, but the problem with that is it could come down and then go up a little bit, and then boom, 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 and then we never did anything. We also have a cross there. I mean, monthly chart looks kind of whack. Yeah, treasury bond. Yeah, actually, I would want to see a full confirmation, and then right here, right there, for position trading, obviously. Oh, potential short. You want to look for potential short? You want to do a short like down here, like this short term? Yeah, maybe. But that's a support right here. Like it could bounce from here, and we could form inverted head and shoulder. So short term short, yeah. Let's go to indices. Actually, you know what? Let's look at Tesla first, and then we'll go to indices today. All right. So yeah, let's not spend too much time here. I still want this thing to come down. Doesn't mean it's gonna come down, but I still want it to. If this thing keep going from here, I'm not gonna get in. I don't like this setup. After this kind of move, I want some pullback and hit the Fibonacci retracement, and at least to this point, this level. And that's my philosophy. That's how I want it. You know what I'm saying? So, oh, thank you very much. Thanks for writing it in yellow font there, so it's very visible. Barbara, nice. Look at Facebook. We'll look at Facebook after Tesla. Actually, I will put it in here so I don't forget. So let's go back to Tesla. Yeah, I'm not gonna spend too much time here. So what I'm gonna do is, you know, if I wanna go long, I wanna go long if this thing comes back a little bit more and come to about 50%. Hit at least that 100 SMA. Because after this kind of move, I want some significant pullback. And I really feel like that's what it needs before another run up. I mean, it could continue like just keep grind higher. Again, it's not my setup. If it's not my setup, I don't chase it. And so I will. Yeah, and you could say, well, okay, you could have gone long here and did that. Again, you see, that wasn't my setup either. It's just not my setup. There is certain things. It's my setup. It's not my setup. There's a discipline part. It's a system part. It won't. My system won't let me. So let's forget that. Let's go to Facebook. Yeah, Facebook doing quite well. Obviously, this isn't the level to start chasing it up here. We're actually long on Facebook. We closed most of our positions up here. And this was when the market was shaky and stuff. It's because we had the resistance there. So we closed most of our positions. I mean, you could always say, well, if you held it, you could have got that in. See, I'm fine with that. I mean, we went long here, so it wasn't, it was just a little bit. But it looks like we gotten past the resistance and looks like it's really thriving again. You can maybe swing trade this. We clear the resistance here. We got a gap up here. You could possibly swing trade for like, you know, week and a half or so, but not a position trading material. You know, this isn't the level where I want to go long and hold for 6 months, right? That's not my setup. But if market is bullish, you can see it where we're clearing the resistance. We gapped up here, so if we can stay above 93 to 95, if that connects as support, even if it pulls back, we can possibly continue higher. But I don't like dealing with this kind of this isn't my setup. I don't like dealing with that kind of that's a monthly chart, by the way. And so but looks bullish, very bullish. It's bullish minor term, bullish intermediate term, bullish primary term. Benefit without goes to buyers in all terms as of today on the Facebook there. Let's go to indices. We'll end this video or end this session. So S&P 500 is a big talk here. So I know what bears look. I'll give you. This is what you do. This is what you do. So when you're doing your analysis, you're very welcome, Barbara. You know, when you do your analysis, what you don't do is you don't, just because you're long on the market, you don't just compile all the bullish argument and start arguing bullish. What you do is you bring bearish argument, bring bullish argument, and then you analyze it. That's how you that's how you do it correctly. So let me give you both. Let me give you bearish argument, bullish argument right now. Let's go with the bearish argument. Bearish argument is obviously this massive head and shoulder formation. We have equal lows. That's definitely potentially some kind of candidate for bearish, some kind of a head and shoulder formation. It is considered, because these lows right here are, slightly low. You can see that that's, I mean, high. So these highs are lower than previous high. So they can consider it as a lower high. So, and this right here, you can see these highs are lower than, so this is peak. And these are the lower highs. So it has a characteristic of left shoulder, head, right shoulder with the equal lows. So we have that. So we got that head and shoulder formation. However, formation, we've had it so many times and it just didn't play out. And here's where bears really wish that they could have, this is where if the bears could have flushed thing down from here, this is where it actually got me a little bit nervous. Right on this day, right there. Right here. We have a hammer, some like strong looking hammer. We're talking about like some long like wick, some big body. I mean, this guy is pretty built, like, you know. And then we get gap down and we get this. A lot of times when you have that kind of hammer and then it gets nullified the next day like that, like it gets demolished like that, a lot of times bulls panic. We're talking short term, and they just start to flee. And when we go to line chart, we put in lower low, lower low, lower high. So high, lower high, lower high, lower low, and slightly lower low there. And that was when I was concerned. That concerned me. And but you know me though, I wouldn't start freaking out. I'm like, you know what, I want to see one more day. I want to see one more day. If we start breaking lower, then I might have to close some positions out. Next day we did that. I'm like, oh my gosh, this is starting to look like we're gonna have some kind of a bear flag rejection type of deal, like bear flag continuation type of deal, right? Like it's like, oh my god, that's just gonna. And then next day we did that. I'm like, huh, that's a pretty big gap. But we closed here, we did that, and then we gapped up, boom, boom, boom. That's what relieved me. And that's the life of a trader. You know, that's the life of a trader. That's something I tell, you know, all my members all the time. Life of traders, you're always living in the edge. If this thing came down, that's pretty disastrous. This probably gonna fill this gap, probably trying to get up again, come over. We might have had a correction then. And just by that one day, that was changed. That fate was changed. And that's what we're dealing. That's the life of a trader. You're living in that way. The best way, I mean, me, you know, I want to leave a peace. I'm not gonna worry every day. I don't want to have a sleep. You know, I can't lose my sleep. So what I do is basically, you know what, you know, that's what I'm doing. I want to see if it actually, I want to see it substantiate. I want the market to tell me that this market is rolling over. This was a very, very like dire situation. We had a head and shoulder confirmed. So we're doing all of this just below the head and shoulder neckline area, and the hammer got canceled. It got canned. But you know what really gave me kind of a... Remember I tweeted out this chart? You see that 50 MA weekly chart? This is the weekly chart. This is the vicinity. This is a vicinity of primary term uptrend. And you know that I respect primary term uptrend. So daily chart, very concerning. Weekly chart, I said, you know, we could do that. So we got up, and the one thing I liked about this, the way we got up, was we did not put in lower high. If this thing would have got up here, maybe some down here, and then it rolled over, that would have been a lower high. But what it did is we came up and created equal highs. You know why that's important? Listen very, very carefully. Do you know why that's important? Can anybody tell me why that was important? Looking at this price action right here. Anyone? Why was that important? Why that equal high is important? Looking just right at that price action right there. Nobody, huh? Hey, at least she said something. At least she put. I'm not making fun of you, Sherry. At least you like put it. Everybody's scared, like they don't want to say anything. No, but no, that's a good try though. That's a good try. No, not double tap. The reason why it was important here. Let me draw this again. Look at this. Okay, just kind of just remove everything else and just look at that. Just look at that area, that boxed area. What does that look like to you that could potentially happen? Very good. Very good. So, I know right now, here's what's happening. The reason why this works as a potential inverted head and shoulder is because of this equal high. This is not, it doesn't qualify as an inverted head and shoulder if this high is a lower high. If this high right here, you see that? It's very important. This high, if that was a lower high, this does not qualify as inverted head and shoulder because this is this is an equal high. You know how head and shoulders work. Do you know how head and shoulders work? Head and shoulders work. They put in equal lows. They put in equal low. They don't put in higher low. The higher low doesn't mean it's an invert. So this is what I'm saying. Higher low is a trend. If you want to form a head and shoulders, you want to put in what? Equal lows. That's a first step. Because if this was a higher low, that's a trend. That's not a head and shoulder, that's a trend. Inverted, if you just inverted that logic that I just talked about, inverted head and shoulder only works if this is an equal high. Then, and it pulled back very, very violently. And I was hoping that we don't come all the way down to 204. We stop short and create a higher low. So now we have a formation of inverted head and shoulders right in the middle of it. And you might ask me, well, yeah, but why is that, why is it important? I mean, can we still have this huge head and shoulder formation? I mean, it's in the middle of it. Isn't inverted head and shoulder supposed to be a reversal pattern after a downtrend? You're very correct. But we're dealing with the market that this is the market. It loves to nullify and repudiate topping patterns with the inverted head and shoulder. Watch this. What is this? Equal lows. This is a Russell 2000, left shoulder, double heads, right shoulder. I call this a monster. 2014, we had a monster head and shoulders. And look at this, look at this, look at this right here. It's very, very important. What do we form here? What is that? That's an equal highs. If this thing would have went up, create a lower high, and rolled over, Russell's done. Russell is done. We're going down. But that piece of information of that equal high, and that precisely that is why I called it back in 2014, December 2014, that Russell is going to be the key index for 2015. What happened? How did we repeat? Look at this box again. And we're looking at more of a bigger scale though. Left shoulder, head, right shoulder. Do you see that? And then this market loves to play games. You know why this market loves to play games? This market is going to make sure that it's not easy for you. So you know what are you going to throw out? Another head and shoulders. Another head and shoulder. Just throw you up, just so you can scare you. Just so that it can scare you. But what I say is we need a full confirmation. It never confirmed. And we actually created a little bit of higher low. So it had a little bit more of a kind of bullish sentiment to it. and then we went up, and then this is where we're gonna have another head and shoulder formation on the Russell. Let's go back to Spider though. I'll deal with this Russell there. So now let's look at a smaller portion. Now look at this. Do you see why that action right there is very, very important? After I just explained it to you under looking at the Russell as an example. Doesn't mean it's 100% guarantee that it's exactly what's gonna happen what the Russell did. That's what I'm not saying. It's a probability thing. But do you see why this is very, very important? Right? Because that's how we repudiate it. Right? It lost its presence, it lost its power, the head and shoulder formation in Russell because of the inverted head and shoulder. We have this head and shoulder formation happening right now on the S&P 500, and we got the inverted head and shoulders just right there. So we got this thing going on. We got this buyers saying, well, I wanna, maybe this is we have some grinding here. We really didn't move much because we know market gets some kind of consolidation pattern and then we get back up. So there's a buyers want to get in, and then there's a bears. There's a people who are fearful, panic, and then they want to sell it. And so we got this battle going on. And then we do this. What the hell is that? I have no idea what that is. It's just like, it's over in the middle. But basically, it doesn't know what to do. Is it a head and shoulders or is it an inverted head? Which is it? We don't know. Right? We don't know which it is. So you might be asking me, what do you think? This is what I think. Because we're still in a primary term uptrend, because we have a weekly chart support, we're still holding that support right now, right? Because we're still in the vicinity of higher low, right? Yes, I give benefit of doubt to the buyers in the intermediate and in the primary term because of this weekly chart. Does that make sense? I'm not ignoring all these potential patterns that are out there. It's there. It is threatening the buyers. I mean, people calling all kinds of stuff. You go to YouTube, 2009 September market crash, all that stuff. Right? I'm just curious, what is gold up to right nowadays? Oh my gosh, this is a mess. Gold is a mess. Gold is a freaking mess. This thing is just, don't even like, this thing, you know, probably even come all day, just a mess. I'm glad that I got out, it just mess. Anyway. So yeah. So here's the thing. Spider, first things first, we got resistance going on here. It's gonna get about 211. We get up, pull back a little bit. We get above 212.86. Bulls declaring another victory. 212. Let me put in right there. What we need to do though, we gotta get up and we're gonna stay up for several days. That will be a confirmation for you guys. 212.81. We get up 212.81 on S&P 500. We stay up for several days. We may even get up, come down, retest, and continue cultivate higher lows, higher highs. That's a declared victory. And you know what? This market's been dealing with such a volatile market. I can't promise you that after we get up, it's just gonna shoot up. We could still have volatile like market, but I still think we can get to possibly, I'm gonna do like more of a primary term leg up, next leg up analysis on it. 225. If we get to 212.81, I think there's a good chance we might get to 225. And it could be by the end of the year, it could be by early next year, but that might be our next target if we do that. Right? Let's go to Russell here real quick. Again, the head and shoulder thing, seriously, like we've been talking about head and shoulder, the formation doesn't mean a thing. Like seriously, don't get scared of these formations. Because this market loves to do that. This market loves it. This market just loves it when it does it. We get head and shoulders here, and then we do that. I mean, like this market loves to do that. So this doesn't scare me at all. I mean, what does get to me is you did have a lower high, so that's a little bit of cultivation. We got slightly lower low there, but when we go to line chart, this is a strong support, very, very strong. You got that pivot, you can the resistance, sellers came in, buyers showed up. So this is a level. So we're staying at this level. Do you guys remember this article? Right there. This was, I mean, I wrote this article, when was that? July 7th. So, I still think that Russell can run. Again, I could be that wrong here, but as long as we stay above 120, I think he can run. You know what I mean? I mean, you know, there's always pullback. I mean, this one pulled back here, continued higher, and did that. I mean, we had that. We had this right here. We had this right here. We had that right there. Those are, you know, corrections in this uptrend, pullbacks in a primary term uptrend. And right now, this is what it looks like this. This is what's happening right now. And we may be just retesting this level before going higher. This is a very, very strong pivot. But I mean, conversely, if we lose that pivot, it could be a dive. It could be a dive, but we don't have that. We don't have that price section yet. So let's see if we can keep that level. 200 SMA is at that level there. Same thing with the monthly. If we look at monthly, this is a monthly chart on Russell. What we're doing is all resistance, new support, all resistance. Retesting it as a new support there. Also, this is a 20 SMA in the monthly chart. So we act as support here. Here, we're just kind of hanging out on that vicinity there. NASDAQ and financials been leading this market. You know, despite what's happening on the spider, NASDAQ made new high, higher low. We're still in an uptrend. I threw a Fibonacci a couple days ago or last week. We came down to 50% for precisely, and we're bouncing at that level here. So if we look at NASDAQ, we don't have any kind of topping pattern whatsoever. Right? I mean, I can just go and look at the actual index. It's a NASDAQ composite index. We don't have any kind of topping pattern, right? This was a kind of where things got a little bit hectic after putting equal lows. That's what I'm saying about head and shoulder, guys. We're dealing with the market that this market loves to play, put in, inflict fear, and then it just do that. And then that we get shenanigan and goes back up. This is the market. This is what it does. It goes up, it comes down, it goes up, it comes down. Right? That's what it does. That's a normal thing. And then like some people always want to like, oh my god, nice pullback and all that shenanigan. Like seriously, pullback is always going to happen. The market goes up, it comes down. That's not something new. You know, you want to get some kind of credit because you said it's going to pull back and you're saying, oh, nice pull. You know, I just that kind of stuff get to me, you know. It's just like, I don't. Anyway, so NASDAQ looking bullish, like bullish in all terms, all terms. Same with the financial sector there. Financial sector, though we pull back, looks very similar to NASDAQ, actually making new highs here. Again, that's a very nice thing. People always want to call shenanigans like that's a bear trap or bull trap or all that. But what's important is it printed higher high. That's what's important. As long as they continue to print higher highs, higher low, this is what it's going to do. And how long is it going to do? Who knows? It's been doing that for 2 years straight. Look at this. Up and down, 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 up, down. Who knows how long it's going to do it? Another 3 years, another 2 years. Nobody knows. This is where what? Another head and shoulder thing. This is where, this you see, left shoulder, head, right shoulder. But this time it wasn't an equal lows. It was more like a higher low. So it loses some of its potency when it's a higher low there. We'll look at LinkedIn. We'll close the deal or close the video here. So, and then you see how this market loves to do that? We had a head and shoulder here, left shoulder here, right shoulder, head there, right shoulder, didn't work. Well, we're gonna have another head and shoulders, guys. We're gonna have head and shoulders here, left shoulder here, head there, and then potentially right shoulder there. Well, that never played out. We're gonna have a head and shoulder here, left shoulder here, head here, right shoulder there. Well, that never played out. We're gonna have a head and shoulder here, left shoulder here, head there, right. Well, that never. You guys get the point, right? Stop saying head and shoulders. Stop getting scared of head and shoulder formations. All year long on the financial, head and shoulder here, head and shoulder, head and shoulder, head and shoulder, head and shoulder. It never played out. Never. Not once. This whole freaking time. Since 2013. 2 years. Nothing. We had another head and shoulder formation like right here. And this was when I went long. Left shoulder, head, right shoulder, nah. Left shoulder, head, right shoulder, nah. And you might be asking me, like, what's the big deal of a financial sector? Well, if you haven't, here, when the financial correctly called the market top in 2011 and 2007, it is pretty significant to me because it's a recent thing. Like Dow theory, like I explained this before. Dow theory of a transport has to confirm the averages or industrial average. There are many times where that didn't play out. I did this and I explained this and demonstrated this, I think like a couple months ago. But financials and S&P 500, you can see here, last 2 times it called market top. This is a bearish divergence. We have a higher highs on the S&P 500. We got lower highs on the financial. Right now, they've been pretty much aligned. We don't have any kind of divergence. They're pretty much aligned right now. We don't have any kind of formation. We don't have that. So this is important to me because it called the market top correctly last 2 times. You see that? You see how the financials start to make lower highs before the S&P 500? We're not doing that. Any questions on the indices? No, I'm still in Apple. If I get out, I'll post a journal, but I'm still in Apple, but I'm getting very close to start. If this thing continues lower, I probably have to close it up. But I'll post a video, recorded video. Watch that, Sherry, and because I covered it right away. The first thing I covered was Apple. We spent about 30 minutes explaining things. So, all right. So I'm gonna talk about LinkedIn, and then we'll call it a night. Oh yeah, LinkedIn. Yeah, LinkedIn is very disappointing. LinkedIn is very disappointing because we had another earnings and we did that, and this was a very, very good cultivation on LinkedIn. We actually do have positions on LinkedIn, and we are losing money on LinkedIn. This was a good cultivation, higher lows, higher highs, and the earnings just demolished it. So this thing is not doing well at all. The only way, this thing, if we get below this area, probably I'm gonna just close it out. There might be a chance we get to this support, we get lower low, and then start doing that, but it's LinkedIn is not doing well. Man, this was really great. When this was start cultivating like this, we just had to get up here, and then we could have finally gotten out. So with that gap down, I don't know why LinkedIn's struggling. And then we have this just crazy head and shoulder formation type of deal happening as well. So no, not good. Bears in all terms, minor term, intermediate term, and primary term. So not looking good here. Let me go to line. Let me actually look at something here real quick. Here's a killer on LinkedIn. Is that this is a weekly chart, and I saw it coming. I really hope. So we got. You see, this is a weekly 50 50 SMA or EMA. Let me check. 50 SMA. So we got the weekly 50 SMA. The reason it's important is because it acted as support precisely. You can see this weekly chart, and then act as resistance. You can see that precisely it did that. Acted as support here, and then acted as resistance. It tanked, it got up, came down, precisely acted as support. And then I was thinking to myself, you know, that we gotta get up here, bro. Because I mean, it could happen. Because remember, we did that here. We did that here. We just went straight through. So what we needed to do: go up, come down, hit it, act as support, bang. But act as resistance. So that's not a good sign long term. So this is the worst performing position in our portfolio right now, and the position became a trash. And we're probably going to just. I'm going to see. If this level holds, that will be last level though. Anyway, it's gonna get up is some kind of double top, double bottom or something. We will need something here. We need to. You can't even do invert head and shoulder. We can possibly do invert head and shoulder if this thing does this. Then you would have to. We have to see a lower low for invert head and shoulder. That would potentially. That will potentially save the company if we can get something like that. But as of today, I don't know what I don't know what I'm gonna do with it. We'll see what happens. We'll see what I'm gonna do with the next few days. We're right at the support there. Okay. Well. That's it, guys. Again, thank you very much for showing up and waiting for me. I really appreciate that, and thank you for emails. You know, that you guys are waiting for me and stuff. I really appreciate that. So I'm trying to, you know, next I'm thinking if I should do these things live, because when I do live event, only thing is that it goes much longer. It's easier for me if I do video, because if I do video, I can do like 20-30 minutes, boom, I'm out. But if I do live, then it's always go to like, today is about an hour and 10 minutes. Sometimes it goes like 2 hours. Well, thank you, Dan, thank you, Peter. So yeah, hey, you know, this is, thank you, Juan. You know, this is, I'll tell you this much. When you're trading, don't be discouraged because something like Apple, let's say you're on Apple and then you're losing a lot of, you know, it's a part of the game. You can't escape it. Sometimes it's just not gonna work out. You just keep doing what you do, and then you know, you get good breaks. There's seasons you get good break. There's seasons where you don't. This year's been very, you know, the market is only up like 2% so far this whole year. So it's a difficult year. It's a difficult year, and you know, everybody wants a correction, everybody wants a crash, and I think that's why it's not going to get it. But that logic is dumb, you know. I mean, I can't just say, well, because everybody wants it, it's not going to happen. That logic is dumb. But I know. Thank you, Barbara. And you know, just that's the life of a trader. It doesn't work out, just take a loss. Had a bad year. Let's go into next year. Hope for the best, and you keep work at it. You keep work at it. Don't give up. And then what you do is 1 year, you just get a good year. You just putting in a lot of money, and you get confidence. And you do it again next year, and you just do that. And the market always do shenanigans, always give us this. It's never a day where everything's perfect. It's never a day where it's a paradise. If you're position trading, if you're learning to position trade, don't look at the market every day. Don't waste your energy on it, because the market isn't like, if you looked at Apple this morning, like when it gapped down, you'd be like, oh my god, this is crazy. Oh my god, what is it gonna do with the Apple? Apple's gonna roll over. Me, I didn't look at the market all day. Seriously, I did not look at the market all day. Did I worry about Apple? Yes, but I was gonna look at it. I'm gonna look at it after market close, so I can just accept it and whatever happens. And then Apple, we got up and we have a little bit of bullish piercing. It's not much, but I saved myself all that emotion. Oh my god, Apple gapped down again. What is it gonna do? Like, you can't sleep. You wake up like 4 in the morning or 5 in the morning to look at the pre-session or the pre-market, if it's gonna gap down or not, and you see this gapping down, your heart sinks and you just like going crazy. That is not the way to trade the market. If you're still in that state, it's a difficult life. I had to learn that, to suppress my emotion, suppress that emotion. So don't be discouraged. And I always tell myself, look at the funny side of things, right? Look at the funny side of things. It's life. And recently I was thinking about this. Like, think about this. Steve Jobs, right? He was worth what? He was net worth what? Like 11 billion when he died. With pancreatic cancer. This is a rumor. This is a rumor that I heard from my dad told me, actually, but I don't know if it's true or not. But he said to his doctor, if you can save me, I'll give you half of my wealth, and that's 5.5 billion. Obviously, he died. If you have your health, you're a 5.5 billion richer. So you lost some money on Apple, that's gonna just ruin your day. No, you have your health, you have your family, you have your friends. I mean, I try to look at it like that. And then this just work. Some days it's not gonna work out. Some years I'm gonna have a bad year. Some seasons I'm gonna have a bad season. But I just gonna keep work at it, trying to do my best. There's nothing you can do. Some setups just don't work out. Apple looked really great to me. It was a good setup, in my opinion. It just didn't work out. Sometimes it works out, sometimes it doesn't. You know what I mean? It just kind of weird like that. It just never guarantee things. And that's what's hard for many people. That's why I always tell people that trading the stock market is not for everyone. Most people don't have a stomach for it. Like a lot of people locally, people ask me like, hey, do you think I can trade too? I'm like, if you don't have a stomach for this, it's not for you. You're gonna just worry all the time. You're gonna get angry all the time. It's just not a way to live a life like that. So I just thought I'll kind of end with that and give you guys, no, you're just. Also, another important thing. I know what you're thinking. Like, this guy giving us like a life lesson. I look much older than you think I am. I'm like 34 years old. So I'm kind of a wannabe life philosopher. So I think a lot of these things. Also, I'll give you one more thing before we close. If you're happy based on your work performance or a trading account performance, that's not way to live. You should be happy even when you're losing money or making. Because if you're making money, you shouldn't be overly happy either. If you're losing money, you should be like depressed. You shouldn't be depressed, because then you live your life like a stock market. Do you want to live your life like that? Look at LinkedIn. Look at Apple. Do you want to live your life like that? Regardless what happens in the stock market or your job or your career, should still be happy because you have health. You can still make it. You're still young. If you're still young, you can still make it. That's just how I see life. And I talk a lot of these kind of stuff, psychological stuff, because you have to have strong mindset to make logical decision. That's what this is very, very important. If you're emotional, if you're angry, you're not going to make decision that is logical or rational or fair. You're gonna do it. You're gonna make your decision based on anger and emotion. And so, yeah, you are 5.5 billion richer today because you have your health. And Steve Jobs, he had 11 billion. He couldn't even use it. It's gone. So if you look at it that way, losing some money, who cares? Who cares? Lose some money. It's just money. At least you can eat. You have clothes. You have shelter. You have bathroom. You can take a hot shower. You have better year next year. You have better setup next time. You do better next month. And I think that's the life of a trader. You know, you go through shenanigan, but you are cool, calm, and collected, right? I don't know. I just lately been thinking about that, and I thought I would share. So have a great night, and talk to you guys next week.
Your line is now muted.